What's going on, chat? Today I ran out of fucking video ideas, so we're gonna be ranking what's it called, Ict Pd Arrays and things of that nature. First of all, I'm gonna rate the fit. You already know I'm gonna be wearing that shit to school tomorrow, bagging all the fucking fine shits and things of that nature. Alright, let's hop right into it. Okay, starting off with the FPG Reaper. I'll be honest with you, I don't know what the fuck that is. Okay, FPG Reaper, I've never heard of that. If you know what that is, type it in the comment section. But based off the fact that I didn't hear about it, it's probably fucking C tier or dog shit. Cause ICT is a lot of white labeled like concepts. A lot of the shit is reused. There's no point of it. Some of the stuff is super fucking extra for no reason. Like why do you need so much concepts? And a lot of them are not even in use. So I'll put that shit in C tier, or actually dog shit, because look at that name. I actually know C tier because the name is tough. The Reaper is tough. Buy side liquidity, sell side liquidity, that is GOAT. And here's why it's GOAT. You can't fucking find a bias without it. All right, so usually the biases are based off of a high time frame sweep of liquidity, or even like a what's it called, a prevalent sweep, like a session sweep or whatever. Buy side liquidity, sell side liquidity sweep is always the start of every single trade. I always look for buy side liquidity to be swept or sell side liquidity to be swept. Now break a structure, either B tier, S tier, not A tier. I mean, not GOAT, but S tier or B tier. That's the thing. I'll put it in B tier for now. I don't really use breaker structures anymore. And another reason why it's not S tier is because a lot of the traders, like beginner traders that use breaker structure, they can't differentiate the ones that work and the ones that doesn't. So technically their breaker structure is a liquidity sweep and they get fucked. So I guess if you know how to use it, it's a good extra confluence. So I'll put it like B tier. I mean, yeah. So it's like, yeah, B tier for BOS. Reclaim fair value gap. I don't even know. Again, this is one of the extra stuff that you don't really need to know. You don't really need the reclaim fair value gap. So to be honest with you, I'll put this in C tier. Changing like character of the thing is a good way to figure out your bias. But the thing is, again, I don't really use CH or OCH. Like I don't really mark that shit out. It's kind of like something that like you could tell by looking at it. You don't really need it. I wouldn't put it S tier. S tier is too high. Maybe B tier. Same. It's really similar to thing. Break structure. Proportion block, reclaim fair value gap. Again, this is really extra shit. Like I never look at the charts and like mark out a proportion block. I know it's pretty good. Proportion blocks, I've heard it's pretty good, but I don't mark it out. There's literally no point of it. And all the people I know that trade, even the people on my Discord server that know what a proportion block is, they don't mark that shit out either. There's literally no point of this shit. I'll put this in like, I guess B tier, because like it could tell you a lot about the markets and the way that it's going. It's a pretty good PD array, but it's really extra confluence. And the same with reclaim fair value order block. I put too much shit in B tier. I'll put this in C tier because it's like, again, it's very extra. And also, you never know if a reclaim fair value gap would work. You can only like, you can't tell from foresight. You need to actually look, like see the reaction off it. You know what I'm saying? To be honest with you, I put too much shit in B tier and C tier. I'll put this in dog shit. Now BPR S tier straight up. It isn't a GOAT, but a lot of good trades or good entries come off the BPR. Like, of course, like you could trade like the 20, like let's say you're trading the 2022 model, trading off a fair value gap. A BPR, if you see that, is higher probability. You know what I'm saying? So I'll put that shit in S tier. S tier BPR. Mitigation block is the same shit as fucking proportion block. It's way too extra, but I could see that sometimes it works. So I'll put this B tier. Turtle soup, straight up GOAT. Using the turtle soup model, you can literally get the bias easy. It's a good move. What's it called? Let me see how I'm doing on time. 4 minutes, calm. It's pretty good moves happen off the turtle soup. And yeah, just a really good way to see. It's like a good entry model. You know what I'm saying? The turtle soup. Fair value gap. GOAT, fair value gap, of course, GOAT, straight up. Volume imbalances, also S tier, I'd put it. Yeah, volume imbalances, I guess you could say like not all volume imbalances will have a reaction off it, but once you understand how volume imbalances work, then yeah, you already know that this shit's gonna go to S tier. And so is CISD. I really like CISD over breaker structure because it turns into a breaker block after, and you can actually catch a trade off that move. Now a gap in the market, here's the thing, I'll keep gap for later on. I have to decide, but new week opening gaps and new day opening gaps, those both go in GOAT, because here's the thing, when you have new day opening gaps and new week opening gaps on your chart, it's easier to tell which way the market is swinging towards. Let's say we have like a reaction off the new day opening gap. You could tell again which way is going to go towards, and if you pair that with, let's say, a liquidity sweep or even like a turtle soup model, maybe for some fair value gaps within it, you can genuinely like have a good bias for the session. And so with new week opening gaps, you can have like a good bias for the week. Inverse fair value gaps, I would put that top of S tier, and here's why. Because not all inverse fair value gaps actually have a reaction off it, but inverse fair value gap would tell you if markets change, or if market's about to start changing in the opposite direction. So let's say like we have like really crazy bullish moves, and then we have like a liquidity sweep with paired with an SMT, and then boom, we have like a higher time frame inverse fair value gap. You would see most likely like it's a good way to tell that, okay, we're gonna start reversing, the trade might start reversing, and it's just a good way to lead on with your bias. And the reason why it's not in GOAT is because sometimes I would trade like a retracement into a inverse fair value gap and nothing would work, right? Like it won't come off, it won't revert, it wouldn't like bounce off. So it's like, I'll put it S tier right here, at the top of S tier though. Order blocks, now this is kind of weird, because order blocks, you could get really precise entries, but like sometimes I start thinking that order blocks don't work because there's no reaction off it. But like at the same time, you also need to know which order blocks to use. I'll put this bottom of S tier, and then a breaker block, maybe the top of B tier. Rejection block, bro, again, this is like some of the fucking extra stuff. I'll put that in dog shit. Not really useful. SMT, ST, this is SMT's and GOAT, obviously. I'll put that shit above turtle soup, because like SMT makes any setup A plus, right? Like if it's, of course, if it's the proper SMT, like you marked it out properly and it's like a relevant SMT. But yeah, an SMT, it's like statistical edge. Like you already know that some some pairs are either like they're correlated, like when one goes up the other one goes up, or they're actually inversely correlated, so when one goes down the other one goes up. These are statistically proven, and it's been back tested from like fucking ages now. So SMTs really make any setup A plus. Breakaway gap, I'll put this shit in C, because here's the thing, like yeah, a breakaway gap could like signify that like we're moving really like we're not going to retest that gap. It's kind of like a good way to figure out where to put your stop loss or whatever. But breakaway gaps are hard to spot like with foresight. They're really hard to spot with foresight. And here's the thing, even if you didn't know what a fucking breakaway gap, it wouldn't matter. Like that's really it. Like if you didn't know what a breakaway gap was, it wouldn't affect your trading. That's why I'm putting a C tier. And a gap, this is kind of like, I don't even know what the fuck this is saying, because like we have new week opening. I don't know what gaps are. I've never fucking studied this. Maybe it's like, I don't even know. I don't even know what the fuck a gap is. So I'll put this shit in dog shit. Yeah, that's it for today. It's a 10-minute video ranking PD arrays. Never thought I would do this shit. By the way, whoever put these ads here, you're welcome. If this video does well, then just extra fucking ads for you there. But yeah, if you did enjoy this video, smash the like button and the subscribe button. If I made any mistake with or you think I made any mistake with the markings or the rankings, drop it in the comment section. I want to hear from your side, like what you think. And yeah, see you guys in the next one.